at
Still
these
buying
levels.
now, still buying now, and remember, we're talking physical, okay? Here, we want to make that distinction between paper gold, which I think is not going to protect you in a crisis, and physical gold, which will. So, yes, I'm currently buying. And then secondly, they say, "Is it too late to buy?" And I have to be really cautious in my reply because gold's gone straight up, uh, like without a correction, and that's unprecedented. In this certainly in the bull market of gold.
In a recent discussion, entrepreneur and investor Frank Giustra emphasized the importance of owning physical gold, not paper contracts, especially during uncertain economic times. He explained that while many investors chase short-term gains in paper gold, true protection lies in holding the tangible asset itself. Despite gold's rapid, almost uninterrupted rise, he maintains his position as a buyer, believing that physical gold remains a safe haven amid growing market instability. He also cautioned that although the price has surged without correction, it's a reflection of deeper issues within the global financial system rather than a simple market rally. For Giustra, it's not about timing the market, it's about protecting value when paper assets can no longer be trusted. For more insights like this, don't forget to like and subscribe.
We are in the middle of a change of the global monetary system. There is going to be a reset. I've been talking about this for years, well, on your show for years and years and years, that the reset is coming, and we're in the middle of it happening. It's happening in front of our eyes, and gold is playing a central role in that reset. And so the whole Bitcoin argument, again, I don't want I don't want to get into the whole Bitcoin thing. People get mad at me when I talk about Bitcoin, but the only thing, listen, buy Bitcoin is great. You can make money, get rich, but it's not gold. It doesn't behave like gold. Bitcoin goes down, gold goes up. They're inverse in their correlation. Stop calling it digital gold. It's just not. It's something else. I'm not sure what it is. And certainly it hasn't been behaving well lately. It had a great run, but it's sure coming off quickly now. I'm not here to slag Bitcoin. I could care less. I just don't like it when they say that,
Yeah.
when some of the Bitcoin people say that Bitcoin's going to the moon and gold's going to zero. That is absolute nonsense. And it is misleading for investors. I always talk about geographical diversification, and that's all I can say. It's just, if you want to really, if you feel like the end of the world is coming, listen, gold will go up for a number of reasons, and it can go up a lot if things get really, really bad. But in a worst case scenario where you need to, you know, run away from the country because the country's imploding socially and otherwise, yeah, it might be helpful to have some gold in another country. That's all you can do. Two main reasons why the central banks are buying gold, and some countries for one reason, one for the other. Yes, de-dollarization is a big one, and that's for two reasons: the fear of sanctions and tariffs, and also the fiscal situation of the United States right now, which is slowly going bankrupt. So that's one. As they sell dollars, they have to replace it with something, and the only neutral currency in the world that is gold. Everything else has other fiat currencies have similar issues as the US dollar. So that's one reason. But then you have the geopolitical, strategic reasons like China. Mostly China, but also Russia and other countries that are part of that whole BRICS movement. My beliefs are buying gold as a currency that will play a role in a future currency trading system. And as I've said before, the most obvious one, which I started talking about 5-6 years ago, is how gold will be used for net settlement on bilateral trades between countries using their local currencies. And the argument always was that that would never work because what is a country which has a surplus going to do with a bunch of unwanted currency of another country, like the Chinese yuan? And I said, was probably the reason China's been buying all this gold all these years is to solve that problem. And what have we seen since? Now you can exchange your yuans for gold on the Shanghai Gold Exchange. And now China's setting up vaults in places like Hong Kong. I understand it's either going to be the UAE or Saudi Arabia next, and I'm sure it'll be Latin America. They're going to set up these gold vaults around the world to hold their physical gold. And my guess it's going to be to give the yuan the backing that it needs. Not like the backing of the old days where a currency was backed by gold, but in a net settlement scenario where Country has unwanted currencies, unwanted yuans, fine. You don't like yuans? Trade them in for gold. That's the mechanism that I saw coming a number of years ago, and that's happening today. We're seeing it. They're not hiding it, by the way. It's not a secret. It's there for everybody to see. So you just got to connect the dots. I think it's becoming very, very clear that fiat currencies are in trouble. Western fiat currencies are in real trouble,
Yep.
not just the dollar. Okay, it's not just the dollar. And it's like overnight, like the world just came down from a 50-year-long LSD trip where they were hallucinating that this time it would be different, that a fiat currency could survive the sort of abuse that's heaped upon it by central banks and governments of every stripe and color over the years. So we've had 50 years of a fiat system that everybody believed in. And now we're realizing that as history has proven over and over and over again, fiat currencies collapse to zero. They all do throughout the centuries. This has been a good long run. It's been the dollar, like all other currencies, have been abused with debt and printing. And there's a point when people go, okay, the game's up. And this is what we're seeing today. And what's interesting when you read the media these days is how quiet the the Tina crowd has become. Tina, there is no alternative to the US dollar. Remember that? The arrogance, the height of arrogance that how can you replace US dollar? Where are they going to run to? Where are they going to go? Well, it's happening right in front of your eyes. And that, that arrogance has been knocked down a couple of notches now, and they're quiet now. No one's suggesting that there is no alternative because they're seeing the alternative unfold in front of their eyes. You're watching it. It's happening in real time. What Jim Rickard said is that $1,000 move is very different when gold's 1,000 than when it's 4,000 in percentage terms. And when it's 10,000, if it gets there,
Right.
it's a much smaller move. That's all he's really saying. And yes, so now today I was just, today's Tuesday. I know you're airing this thing tomorrow. Gold's up another $40-50 a share announced this morning. It seems to go up every day. It corrects like by $10 and then goes up 40 or 50. I've never seen anything like it. And I don't think, because this is not investor driven, I don't think this is a bubble. People are saying, well, gold's in a bubble now. It's too late to buy. No, you got to get away from that thinking because you have to realize that there's a dynamic happening here that is a once in a century dynamic, and you're seeing it unfold right in front of your eyes. This is a monetary system reset happening in front of your eyes. So it's not like investors going crazy and driving the gold price. It's going up for a completely different reason.
We are witnessing what many have long predicted, a global monetary reset unfolding in real time. The current system built on fiat currencies is showing visible cracks, with central banks worldwide turning to gold as a stabilizing force. This shift isn't theoretical anymore. It's happening openly as nations diversify away from the US dollar, seeking protection from debt, sanctions, and instability. Gold is emerging as the neutral settlement asset for global trade, especially as countries like China establish gold-backed mechanisms for currency exchange. The decades-long belief in the endurance of fiat systems is fading fast, replaced by a return to tangible value and monetary realism. Let's get into the interview.
These markets are at historical all-time highs. I mean, the valuations in the U.S. equities are beyond anything we've seen before, and it's been maintaining that overvaluation for quite a long time. There's so much debt in the system, and not just government debt, but debt throughout the entire system and leverage through the entire system on these plays, that if something happens, and listen, the world's become very unpredictable, and fragile. So anything could happen that triggers a sell-off, which in a debt-ridden environment can really become a spiral. Okay. Now, that's not to say that this market can't go higher. You know, never underestimate how far a bubble will go. So, I'm not saying that the market is going to crash tomorrow, but my God, there's going to be a correction one day that's going to catch a lot of people off guard and will really take an already fragile economy because, the U.S. economy is not as strong as they, let you believe. I mean, the jobs are, you see these job revisions last year and now this year again. I know it's you can't even trust data anymore. But it's a very anemic economy. It's sure, yes, very strong in the tech sector, leading the world in technology and AI and all these things, wonderful. But the overall economy is not that strong, and we haven't had a recession in a very, very long time. So when you get an unwinding of a market, it has a knock-on effect on the real economy. And that will happen. I just don't know when. So you can still play this market and make a lot of money and think it's gonna be 1929 forever, but at some point it ends. And there will be an unwinding because of the debt levels. And that's what worries me, because you get into a debt spiral, they're gonna start printing money, what? And then you're gonna get this crazy hyperinflation, because there's no other way to deal with an unwinding that, they can't control the long-term rates unless they print money. And so I've been predicting that we'll see QE again, and probably
Mhm.
under this administration. So
Wow.
yeah, I'd be
Yeah.
very careful when I'm very defensive at the moment. I just like think, listen, own a lot of gold, own some cash, and stay away from the overvalued equities in the US. There's lots of great equities around the world that, are trading at lower valuations that pay great dividends and whatever. Don't chase this bubble. It's just because it will unwind at some point. Gold's gone straight up, uh, like without a correction, and that's unprecedented in this certainly in the bull market of gold. So, first I tell them to say three Hail Marys for not having listened to me, but then I say you should pick away at it over a period of time, because you're never gonna nail the right price on gold. Gold can be volatile, so I'd hate for people to go in and buy today their entire amount and have it go down 20% in a correction.
Right.
But so if you buy it over a long period of time, pick away at it, you'll get an average price. You may not get the low, but you'll get an average price, and that's the only way, because predicting the gold price on a short-term basis is really it's a fool's game, and I've never done that. So that's the way I would do it. And personally, I started buying my gold in 2001 and then again in 2018, and believe it or not, I'm still buying it today. And thinking, given that what I believe, I think gold in time will go a lot higher for all the reasons that you and I have talked about over the years. So that's my advice to people, is just do it over a period of time.
Markets are soaring at levels we've never seen before. Valuations stretched, debt piling up, and fragility hiding beneath the surface of optimism. History tells us that bubbles never last forever. When this one unwinds, it could shake an already weak economy, forcing policymakers to print more money and fueling the cycle of inflation once again. That's why holding real assets, not just paper promises, matters more than ever. Gold isn't about timing the market. It's about protecting your future through what's coming next. Take a calm, steady approach. Accumulate over time, stay grounded, and prepare wisely. Because when the correction comes, it won't wait for anyone. Like, subscribe, and stay informed.